Oh, yeah. I never made a fortune. It's probably not too late. It's probably not too late. Oh, but I don't worry about that much. 'Cause I'm happy anyhow. As I go along life's journey, I'm reaping better than I've sown. I'm drinking from my saucer, 'cause my cup has overflowed. Ain't got a lot of riches. Sometimes the going is rough. Going gets rough. But I've got a friend in Jesus, and that makes me rich enough. I thank God for all His blessings on me and the mercies He's bestowed. I'm drinking from my son.
Welcome to the Mortgage 101 show. How are you, Jose?
Hey, what's going on? How are you? How you doing today?
Good. Thank God. Okay.
Friday's been good to you so far? The week's been good?
Yes. Thank God.
Good. Yeah. The cold threw me for a little bit of a loop this week. I'm not gonna lie. I was not ready for it. Even though I knew it was coming, I wasn't ready. So it hit me a little different. In the joints. Yes. It hit me in the joints this week.
Normal winter, nobody ain't stopping normal winter.
Yeah, right? Yeah, no. But I heard it's supposed to be in the 60s next week. So I don't know. This kind of weather always gets me, This kind of weather is always the one that makes me I end up getting sick, like catch a cold.
Oh, okay.
Yeah, so I might be sneezing next week. We'll see.
All right. Yeah, so let's move on to our show. Welcome to the Mortgage 101 show. It's a part of the Pozytyve Radio Network at 106.9 FM with Auntie Donna Moore Stewart Color. Okay. So our host today is Jose Velasquez and myself, Christine Gallimore Wright. So Jose will thrive to bring you honest and real information. The listeners can expect to hear that and more from our show today, and it's based entirely on the education of ownership. What is needed to buy a home, the process, and how to access funding, and to diversify your savings that you already have. Okay. My co-host, Jose, you have a common goal in mind, and that is to lead every homeowner in the right direction and with accurate and helpful advice. And that is for free. Okay, Jose, right?
Absolutely.
Free advice.
Absolutely.
Okay. So my name is Christine Gallimore Wright. I am a licensed field underwriter in the insurance field. And Jose, you're the mortgage expert, so take it away.
Hey, what's going on? So for some people who don't know me, a little bit about my background. I came from Chase very early on, right? They actually plucked me right from college campus. Started in their program, got my Series 6 1963. I was studying for my financial advisor. teamed up with my partner who had opened up his own brokerage, then got back into mortgages, was licensed actually back in 2010, got back into mortgages, started out as an LO, right? Like we all do, started out as an LO. And now basically I have a JV and I'm running the Latino lenders with East Coast Capital and, basically kind of running social media and stuff like that for them on that end. And then have, 2 loan officers that I work with right now that basically handle the majority of the loans, along with my processor, the assistants, and the underwriters and everybody else. So because of that, I, really wanted to come on here and kind of give everybody the ins and outs, behind the doors, I guess, or behind, the curtain scene as to like how a qualification really goes through, what the underwriters might be thinking, what the processors might be thinking, what they're looking for. I think a lot of people kind of got caught up or remember pre-2008 where they used to literally make jokes that if you breathe, right, you could get a mortgage. That's not the case anymore. They came in and they completely, like anything else, right? They went complete course correction and went the complete opposite way. So now we ask for everything under the sun, but sometimes clients don't understand why we might be asking for something. Classic case today, I had a client that I had been asking them for bank statements. And on the bank statements we were looking for the check that was deposited. We just need to see that the check deposited matched a quote unquote large deposit that was made the month prior to us closing. So in the month prior, we saw there was a $4,100 deposit that was made. We just need to say, hey, where's that for? Why did that $4,100 come from? And the reason for that is because of this anti-terrorist, anti-money laundering law that they put in place, right? Yes. So because of that, what some people might consider $4,100 a small amount, someone else might consider that a large amount. But either way, it lands on these arbitrary numbers sometimes. And depending on the client, they don't understand why we're asking them for that particular piece of information. So I think if we can kind of clear up some of that stuff, it makes it a lot easier, and it takes away a lot of frustration for a lot of clients. A lot of people, when they're looking to buy a home, it already is super stressful. You're talking about purchasing something that's in the hundreds of thousands, right? In a lot of states, in some states, right, it's less. In some states, it's even more. But either way, for most people, it's the first time they're doing it, so they don't know. It's a scary time, and like I said, a lot of people remember 2008, the crash. Is this the right thing for me to be doing? Should I be doing this, and everything else in between, right? So, our job really is to kind of just advise you where you're at, and that's kind of like where the Mortgage 101 kind of comes from, right? I'm gonna let you guys know basically what's needed, right? And and Christina, sorry.
Yeah. Did you say that the amount that was in question was 4,100? That's 4,100?
4,100, yes.
Wow. I think it would be like anything over $10,000. Now, is that minimal? They questioning that minimal?
So, right. So again, when I was at Chase, right? And on the bank side, not on the wealth side, but when I was on the banking side, when accounts were being deposited and you would see 5,000 or more, they still completed a form. Even with people not knowing, they still completed a form just noting it, because again, they needed to maintain paper trails and know that where money was coming from, because so many banks, I forgot what bank, now we're talking about such a long time ago, but there was a couple of banks that these terrorist organizations were funneling money through.
Yeah.
They took advantage of a system, right? And they funneled money through it. So now they cracked down and they were like, hey, we need to track all this. And, it became annoying, but then people just kind of became okay with it. Now, right? If you're walking into the bank with more than $10,000, they're going to write something up. Yes. Everybody knows that. Before, you used to be able to think about that. Before that law, people used to be able to come in with $1 million in a briefcase, just put it into the bank.
Exactly. Yes.
So, things change.
Seen that happen all the time. Way back then.
Right. So now I have clients that are still used to that old system where they're depositing 5,000, 6,000, 10,000. And they're like, oh, what do you mean? That's not a lot. And I'm like, well, no, it is, because now to these rules and regulations, now we do have to source these, and that's kind of the case. So I get all kinds of clients, and you'd be surprised. There are people who are buying houses for the first time in their 20s, and there are people who are buying houses for the first times in their 40s, 50s, and 60s.
Yes.
So so seeing all that, that's why, like, that particular client is 58. So for them, they understand banking, right? In one particular way, because that's how banking has always been. So now that they're trying to buy a home, now they're seeing the new regulations and all the craziness that banking has to offer. So kind of guiding them through that has been pretty interesting. But those are the kind of the things and the navigation that I give most all clients that need it, right?
Yeah.
And today I want to give an example. Mm-hmm.
Yeah, let me input, being that we're on the the money part and the savings, because we in the Caribbean, we're mostly, I think we have a mostly Caribbean audience. We have a thing that we call Susu, our partner.
Right.
All right. So and that's live cash money. You are, right?
So I'm familiar. So on the Asian community, they have it as well.
Oh,
right.
okay.
So I have a lot of and I have a lot of Chinese, Japanese cultures. They do. I think it's actually I think a lot of immigrants. It's something that got adopted. I don't know who started it, right? But when I asked my mother about it, when I asked my mother about it, we're from El Salvador, right? My parents immigrated here from El Salvador. She said, yeah, no, we did the same thing. Like, you would do 500, 200, 1,000. It was different, right? Depending on which one you were in. And so I'm familiar with Susus and how they work, right? What I tell most of my clients is, like anything else, we have to be able to trace and track all the funds, right? Yeah. In the bank, through the banking system, right? So if they got it through the Susu, right? And actually, I've never done a Susu. Have you ever done a Susu?
Yes, I was the banker.
Okay, cool. All right, cool. Yes. So you might be able to speak more to this as to how it works. So let's say we're in $100 Susu. How does a Susu work?
Okay, let me see. It's been a long time. Let me see if I can recall. It's like you pay in, like, every, say you have like 10 people, 10 people together, partner together, and you would pay in like I think like 10, make it simple, like $10 per week or per month. Right.
So it was different depending. Mm-hmm.
Yeah. So you have 10 people. I'm gonna put it, as weekly. 10 people per week. Put it in like $10. Right. So that's
so you get $100 at that point.
Right. Right. So,
right.
So they would get.
So if you were that was if you were the person getting it, you would get $100 that week.
Yes. So
I got $100.
I would be the banker, so I would put together all of that, and for it was like the first person. It has a first person that comes in, they would get priority draws, something like that, right? Say you came in first, you would get the first draw. We call it first hand. So you would get $100, and the next person get the next week get the next $100. So, and it's it rotates. It's a cycle.
Got it. And then the idea was that you would so, like, let's say I got the $100. Now every week would I still be given $10?
Yes, you still got to pay back. Everybody goes another $10. Yes.
Right, because the idea, from my understanding, is that it's almost like a savings account, right? So you put $100 in. By the end of it, you'll have $1,000, and now you have this round robin savings account that you're kind of been growing.
Yeah.
So yes, right. Susus are great, but what I could always recommend to clients is, if you're already disciplined enough to put $100 a month away, or $10 a month away, you can start putting that money back into your bank account instead, rather than doing a Susu, right? Like that would, if you can save $100 one way, it's the same thing. Just put it into the bank, because we need to see it in the bank accounts. So the sooner you put it in, whatever amount it is, the sooner you put it into the bank account, the sooner we're able to use those funds.
Right. And for those already in the Susu, deep in the Susu, all right. So you saying that? Yeah.
if you're already someone that's already deep into something, right?
Mm-hmm.
Um, Again, it depends on the size and everything else and what everyone's trying to do, right? Everyone's already kind of in that same mindset, and you kind of hope that the group that you're in there with has that same idea, that you can branch out and say, hey, look, I'm looking to buy a house.
Mm-hmm.
I'm looking to buy a house. I need to
Have
um
records, right?
yeah, I need
Get
to have
some records.
records, whatever it is, like kind of prepare it along, because they need to see what's going on. They need to see it for a year, have the records, in order and everything else, and, line it up that way. That it's definitely one way to be able to do it. Like I said, it's depending on the situation, depending on the state, because of COVID too. There's a lot of regulations and a lot of rules that have been kind of changing. Some for the better, some for not, right? So this particular time, to susus and workers comps that we've been getting, unemployment and things like that, it's the guidelines have been changing so rapidly, right? In the beginning, a lot faster than they have now. Now things have kind of like eased up a little bit, as far as like how fast they change. But we're coming into the next quarter, and they're already talking about being able to. So this is kind of cool, right?
Mm-hmm.
So this is something that they're thinking about adding into. They already okayed it. It's just now a matter of putting it into the like putting it through into underwriting, so that way we can now follow it for the following year, right? But what's going to happen is, let's say you don't have credit, right? You Let's say you've been in the country a few years, you don't really have credit, you have your residency, but you haven't really established credit and all that. In order to buy a house, we will actually be able to use 1-2 years of your rent.
Oh, okay.
So they're going to start using that as an actual form of qualification. Before, in the past, it was something that they used for considering for underwriting, but now they're actually looking at it as a form of qualification, which would drastically bring in another 20-30% of people that kind of like the susu, right? Now that you're used to paying
Yes.
rent, and you can say, hey, look, I've been paying 1,500, 800, 2,500, depending on where you live, right? In the country, it varies, right? So,
Yeah.
but as long as we can show that you've been paying that rent consistently for that time frame, then it's a huge part now to be able to qualify. So, but that again comes into effect this next year. But
That's
there
good. That's
are,
why we have you. That's why we have you here. You're the expert. And so, in order for people to get in touch with us, I'm going to give my number out, and this information will go straight to Jose. Okay, the number is 888-225-9593. One more time, toll-free number. Everything is free here, free information, free consultation, right, Jose? It's all free.
yeah, it's
Okay.
it's informative, guys.
Yes. That's 888-225-9593. You could go, that comes to our phone or direct link, and Azay will get all information. So feel free to call us, and we get all information over to Azay, and he will take care of you. Okay, Azay, you want to
So
continue?
yeah, so all right, so this is kind of, I want to take a step back and really dive into the fact that we were talking about money kind of puts us into the down payment, right? There
Yes.
are things in the mortgage process that are important to have in order to qualify, right? Or what the bank looks for, right? They want to look at your job history. They want to know that it's been stable for 2 years, right? So if you've been a nurse, you've been a nurse for the past 2 years, great, that looks stable. But if you went from being a firefighter, a nurse, a cowboy, a farmer, then they're going to go, hey, your income is very
Hustler.
unstable. Right. So they're not sure what you're trying to do. So they can't figure it out. Right. The same way anybody would look at that and be like, what are you doing? That's how the banks look at it, right? So they want to see you have some kind of stability. Now, if you are a nurse, and then you decide to be a traveling nurse, right? And then you decide to be a nurse assistician and move up or whatever. As long as you're kind of within that field, it's okay. Or even if you move up in the field or even down in the field, whatever, it's okay. We can make justifications for those, right? Because you're still kind of within your same field. Now this is for for the people who are like the side hustlers and doing things on the side other than their job. If you also have a business, right, and you establish a business, that's the key, right? You establish a business, LLC, S corp, whatever, sole proprietorship, it doesn't matter. But if you have bank statements, right, because that's how we track things, guys, by bank statements. If we see that you have some kind of action going inside of a business as well, and you've had that business now for 3 years or 5 years or 2 years, right, depending on, there are advantages to being a business owner and trying to take out a mortgage as well. So, it's just a matter of navigating it. It's not cookie cutter as far as how I've really seen the mortgage industry. And like I said, just coming from Chase and doing, wealth management and everything else, like, real estate ties very much into it. And I think when the market kind of course corrected and that these loan officers were created and they started giving people licenses and stuff like that, I think that that the loan officer really kind of becomes a big part of the financial advisor role, right? That whole wealth management role part.
Right.
In that, this is probably one of the biggest well, actually, for most people, 90% of people, this is the biggest purchase they're ever going to make, right? Unless they're buying a business, right? You decided that you're going to go in and buy a car wash for $500,000 or something like that, right? This will typically be like the largest purchase most people will make, right?
Yeah, you'll be stick a piece of humor inside there.
Yeah.
Okay. Right. So, just a one-liner. A woman proudly told her friend, "I'm responsible for making my husband a millionaire." She said, "Well, what was he before he married you?" The friend said, "He was a billionaire." So, you get the gist of it?
Just as fast, but both ways.
Right? She said she's probably, she's responsible for making her husband a millionaire. So the friend said, "What was he before, a millionaire?" She said, "Oh, he was a billionaire."
Yes.
So he goes from a billionaire to a millionaire.
The children have the same effect. Anybody with kids out there? Anybody with kids out there? You can go from pocket starts emptying. It's so funny, man. Kids, between life, right, like, and spending and everything else, it gets to be kind of crazy. And right now, inflation. They're talking about inflation. Right. So we're talking about spending and you talk about inflation and all these things and people kind of like worrying. Real estate, as we've kind of seen throughout the years, real estate's that one place that's stable. The whole world increased by 10, 15, 20%. So did real estate. It kept up with everything, even though we had a crash back in 2008. Real estate's king. They're not making more of it. Blah blah blah. All that jazz is true. You know what I'm saying? All that jazz is true. Right now, if you go out to buy a house, there are more people making offers on homes than there are homes being made.
Yes.
And that's just a fact, right? So we can't argue with that. So as long as that stays relevant in that direction, real estate's always going to be a safe bet. It's always going to be good. So for people to get in, I have a small scenario. I think I picked this particular number because I feel like no matter where people are, whether they're in California or they're, down in the Midwest, this number, you could either go up or down with it, right? So I did $350,000 as a purchase price, right? So, out here in Manhattan, you could see a 1-bedroom for $500,000 to $1 million, right? So, 350, I would say just double it, right? If you're looking for something that's 700,000, just double it, double my numbers. What?
Did you say California?
California too. California, I would double this number, depending on where in California. Not that you can't find homes at this price. It's just, a lot of people are in very high priced areas in California, throughout the country. But 350,000, I think, is a medium number that we could use. For that, I kind of broke it down, two different amounts, right? 5% down payment and a 3% down payment, right? So now, depending on the state, the taxes are going to be different, right? So again, I use a closing cost of roughly about 5%.
Okay.
And the reason for that is because here in New York, things are taxed, much higher. A $500,000 home in New York could have, actually, I'll give you this example. I did a home, I closed on it, $420,000, right? Was the price of the home. $22,000 was their taxes a year.
Taxes. Oh.
So, I have a $400,000 house that I do in Georgia, right? I give them a mortgage, and they're paying $3,000 a year in taxes.
Yeah.
So closing costs will vary, because what the closing costs are ultimately, it's we will collect those taxes for, let's say, 3 months, 6 months. It'll depend on the time of year that we're closing, and all that. Like, the title company really handles that as far as setting that number up. But just to give you an idea, it could be 3 months, it could be 6 months. So if you're looking at someone who has $12,000 a year in taxes, and we collect 3 months, that's $3,000. If we got to collect 6 months, that's $6,000, right? So about it's about 3 to 5%, depending on the state that you're in.
So as Hazel, you say collecting 3 months, that is 3 months reserve, 3 months or 6 months, is that for
Taxes.
reserve? Oh, for taxes.
That's the taxes. That's the escrow. So that's the escrow that needs to be established. Yeah. So when you take out a mortgage, there's an escrow that needs to be established.
Right.
These are all part of the closing costs. So that's part of like what people don't understand that concept. And a lot of times I try to tell them, I'm like, look, like, has nothing to do with the bank. That's literally the money that we need to collect up front for the government.
Yeah.
Right. Like, that's for here. It's Nassau County, Suffolk County, right? New York City. So they want their piece. We got to collect it, and then we got to pay them. So nobody escapes Uncle Sam. So depending on where Uncle Sam's collecting, it's either going to be more money or less money, which is why people in New York, we pay higher taxes. It's crazy out here. New York, California, those states always have higher taxes. And then you have, like I said, Georgia, Arizona. I've been seeing Ohio that have just, lower taxes, and the closing costs are less. But purchase price, it's going to be the same. So as far as the purchase price, $350,000. If you're putting down 3%, it's going to be $10,500. If you're putting down, if you're putting down 5%, it's going to be $17,500, right? So total for a $350,000 house, you would either need, depending on which one you would qualify for, these two separate programs, you would either need $35,000 or you would need $28,000, right? So if you qualify for, Home Ready, Home Possible, it's a 3% program where you put 3% down. It is income based. You can't make past a certain amount, within the mean range of that particular area. So it's a much more in-depth loan to be able to put down 3%. But again, the whole idea here is to be able to help people get into the best program for them. So sometimes it's like, okay, they have maybe 16,000 that they've been saving up. They're really close to getting to 28,000. If they can get to 28,000, then we can put our foot in the door and they could stop renting, and now they can get into a house. So like I said, everyone's got their scenario. Some people want to wait and put down 20% because they don't want to pay MI. Like I said, everyone's got a game plan. My job is to kind of talk to the client and go, hey, okay, what are you looking to do, and how do I get you to your goal?
Yeah, let me interject, Jose. And MI is mortgage insurance. Just clarify that for the
MI.
audience. Okay.
Yeah, so MI is mortgage insurance, right? Okay. And mortgage insurance basically is an insurance that the title company, right, the mortgage company, and kind of like everyone involved puts on the mortgage, the note itself, that if for some reason, let's say you default on your mortgage, they will cover part of that loss and everything else. So they're trying, again, these were all things that really came into place after 2008, was because now everybody's trying to be really, really safe and really, really careful. Obviously, right? Nobody wants to get burnt like they did. So they put all these things into place. So MI had already been there before. All right. I also want to clarify that MI had already been there before, but how to qualify and the percentages and stuff have gone up since when it first was out. So now, MI is higher, so people are paying. So let's say you have arbitrarily, you have a rate of 3%, and your MI is 0.25%. Then technically you're paying 3.25% every year, not 3%. And things like that. So like with an FHA loan, there is a 0.85% MI if you're not, so with that, you're almost adding another percent to the loan. So now if you're looking at a 3% rate FHA, you're really paying 3.85. So it's those little things, right? For me, it's telling the customer, explaining to them, letting them know about it, but really, again, ultimately finding out what their wants and needs are, right? Because rates are kind of irrelevant too, right?
Rates. Okay.
Yeah, rates are super irrelevant, right? And let me tell you why rates are super irrelevant is because right now, especially, rates are super low. This is the lowest it's been ever, right? So people need to take advantage of that in particular, because could they go any lower? Sure, of course, 100%. They could go lower, right? They could go to 1% technically,
1%.
right? That's true. But rates in the 80s were 16. Mm-hmm. So there is a much higher ceiling. You know what I mean? Like it's much higher the other way than it is further down. So your chances of it going down are way less than the chances of rates going up at some point, right? So when you used to take out a mortgage back in the 80s, you'd be looking at a 12%, 15%, 16% rate, etc. House prices and things like that have gone up because rates have gone down, which is kind of like that whole shift that we saw. Why real estate went up was because a lot of people's income had gone up that year and rates went down. So people's income going up, rates coming down, made it a perfect storm for the real estate market to kind of like blow up.
Yeah, Kristen,
plus again, inventory is low. Yeah. Sorry.
Does your credit have anything to do with the rates you're getting?
Yes.
Okay. So, you want to elaborate on that?
Right. So credit. So here we are. Right. So the down payment, how much money you have to be able to put down, which now you guys know, right? If you're looking to put down anywhere between 3 to 5% down payment, and you also need anywhere between 3 to 5% for the closing costs, right? So you're either going to need $35,000 or $28,000 in order to buy a $350,000 home. Okay. Now you don't have to do it by yourself. You can do it with multiple people. You could do it with 1, 2, 3, even up to 4 people, right? But the story's got to make sense. You cannot go and buy a 1-bedroom, not condo. What is it? 1-bedroom, like flat, right? Like studio, and say there's going to be 4 of you living there. They're just going to be like, okay, that doesn't really make sense. But if you buy a house that has 4 bedrooms and you're 4 friends and you want to buy it, or you're 4 brothers or sisters or family, it can work, right? So if everybody pools their money together, $28,000, super achievable. It's again that's like buying a car.
Yeah.
And a lot of people buy 1 or 2, even 3 cars in their entire lifetime, right? Or paying car payments. So if you just took that mind shift towards this, same thing, right? If you're already used to paying a susu, if you're used to paying a bill, just getting to that number amongst 3, 4, 5 people, then what happens is the average person refinances their mortgage 5 years later. And a lot of times they're refinancing, they're taking someone off, they're buying another property. And that's, how wealth kind of starts developing is, your house is going to go up in value whether you want it to or not. Right.
All right. Jose, just let me interject to give out our number, of course. I know it's on the screen, but for the listening ears and how to get in touch with us, our number is 888-225-9593. 888-225-9593. So we could get in touch with Jose. We could put you into a home in no time.
So now you know. Yes. Anywhere between 8 to 10% is minimum that you need for down payment. So whatever the house price is, 8 to 10%. Put that away. That'll get you in the door. Income, right? Income. Oh well, we said credit. So credit, credit's one of those weird things, right?
Yeah.
If you have a 680, you're pretty much considered golden. 680 and above, you're good to go. 660, there might be some work we have to do, but you're pretty much good to go. 620, you're also good to go. As you go down, people know, right?
Yeah.
Guys, like let's be real, right? Let's and this is how I am with my clients, right? Like I'm like, hey, let's just be real. 660 means you have a 660. Like, what's up? What's going on? What do we have to fix?
Right.
What do we need to explain? That's so on and so forth. If you have a 720 credit score, I probably don't have to explain a lot of things, if anything, right? Like
Right.
on your credit. If you have a 620 credit score, there might be some stuff I have to explain. People go through divorce and their credit gets shot. People go through bankruptcies. They might have started a business. Listen, 2020, right? People died, people lost businesses, everything in between. We understand, right? Like the bank is human. So we just have to explain certain things. Even if you have terrible credit, it's not impossible. We have to work towards stuff. That's why a lot of times we work with credit repair, right?
Right.
And we do that.
Yeah.
And we do that for that particular reason. So, it's about telling the story and then being able to put it together. Because let's say we're able to get the credit from a 620 to a 680 in let's say 3 or 4 or 5 weeks, depending on what the issue is, or maybe long, whatever. We put a plan together so that way we help maximize, what the client will be able to qualify for and things like that.
Right.
And generally fix their credit. You know what I mean? Like things open up when you start having 660, 680, 700 credit scores. Like everybody wants to lend you money all of a sudden.
Exactly. Yeah. And
You know what I mean?
we want to let everybody know that home ownership is the best investment there is. Right, Jose? When you have a home, you'll be surprised what doors they open up for you, what opportunities. Right?
I'm super biased, guys. I'm super biased.
You are? Come on with your by yourself, though, Jose.
But I'll say this. There are certain things that are really very true, right? Like the house prices and just prices of stuff in general have just gone up over the years. They have never come down, right?
No.
Never in history has prices come down. So if you own something that has a price associated to it, in 30 years, it's probably going to go up. Even if, if you collect it, oh man, like this, cafe McDonald's cup, right? this cup
Listen,
today,
you had that. How about this?
Look at that. That cup today.
How about this?
Today, if you try to sell that,
how much will this be?
How much would it sell for? Right. Whatever this cup would sell for today,
how much will
in 30
this
years,
be?
it'll be double.
I try to get it.
No matter what.
My Pozytyve radio cup. I can't even get it off. Okay. My Pozytyve radio cup.
There you go.
How much will this be the next,
I'll tell you
5 years?
It'll be more than it is today.
Collector's item with Auntie Donna, called caller. Everybody gonna want her cup.
It'll be through the roof.
Oh yeah,
through the roof. You'll be shocked. But and that's kind of it. So in real estate, it's one of those things where the money works. It's something you have to pay to live, no matter what, right? So you have to pay. And so in some people's cases, it is more expensive, And I know that payment going up is it's a harsh reality, but in the long run of things, real estate does 2 things, right? And like I said, everyone's scenario is different, but this is one way of thinking that I've come across with clients, and they this is how they do their business. The whole point is that they get into a home so that in 15 years they could refinance and cut their payments in half, let's say. So let's say today you're paying $2,000. 15 years from now you refinance your home and your payments are $1,000. What would your rent be in 15 years, regardless if you bought a house or not? It wouldn't be $2,000 anymore. It would probably be $3,000, right?
Yeah.
So if you had your own home, you'd be able to lower your own payment. Imagine that,
right.
Yes. Stuff like that. Or another scenario would be in 15 years or in 5 or in 10, you would build up enough equity that you can now use that equity to buy a second home that now pays you rent. Now you're collecting. So like I said, everybody has their ideas. People took money out to buy cars, right? Some people, that was what they wanted to do. They bought cars they bought boats. They, decided to live a certain lifestyle because the house prices were going up through the roof. I would just say, yeah, it's going to go up, and just, put the money to work the right way. Right. And
Yeah,
that's hopefully what we're here for.
I have a good example. We sold the house, I think it was like 8 years ago, a brownstone in Brooklyn, New York,
Mhm.
for I think it was about either 5-6. It was a three family, 5-6, either 550 thereabout for the three family. We sold it, and you got it appraised like 2 years ago for $1.2 million. A brownstone in Brooklyn, New York. That's in what place in Brooklyn, New York? Raphael lived. What's the place? Bedford Stuyvesant.
Okay.
Yes. The house is worth $1.1 million now.
See,
Yeah.
it's. But how much was that house worth in the 80s?
I think we sold it for like. He bought it for like 550 thereabout. Yeah.
How long ago?
That was like 8 years ago.
No, 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 no. I mean, how much was that house in the 80s?
Oh, in the 80s? Good question.
Right.
That
So,
house in the
whatever it
80s,
was,
maybe like 350 or 300, thereabout. Yeah, about that.
think about that.
I know.
You would have bought that house in the 80s,
About
even
that.
though right, that neighborhood was, right? That neighborhood was rough,
Yes,
but
it was.
that neighborhood was rough. But if you had $1,000 back then, you'd be a multimillionaire today.
Yes.
And people within that, and that's the whole point, right? Is buy real estate. It doesn't
Yeah.
matter. Buy real estate. Even if you're so let's say you're not in the best neighborhood, and you're like, either way, that might be the only rent, let's say, that you could afford, right? Because that's just how the things work out. Okay. Try to buy a home in that neighborhood and also rent out. So that way you build the equity. And again, the only reason I say these is because I've seen other people implement these strategies, and I've helped them implement the strategy. And they buy a house in a neighborhood that is obviously not ideal for them. And now that house has gone up in value over the next 5 or 10 years, and they either sell the home or they refinance, they take the money, then they buy a new home in a nicer neighborhood. And guess what? From the mortgage side, we go and we say, hey, no problem. They're going to say they're collecting rent from this home where they lived previously. And now they're moving to this home because the school district's better, because they have a backyard, because of this. So now we can use, even though you've never collected rent ever, 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 we're going to say, no problem. We're going to pretend, right? Because that's really what it is. We're going to pretend that we can collect this rent because in that area, this is what it goes for. And guess what? Whatever your mortgage is, it's probably their rent payment is going to be higher because now you're 5 years later or 10 years later. So rent in that area have gone up regardless. So they should cover your mortgage. You just got to make sure you have good tenants that pay you. That's right. And now guess what? Now you became a landlord, and now you have a house that's getting paid by someone else, which is something that you were doing 10 years ago. But now someone's doing that for you, and now you're paying your own house as well. So now you have 2 homes. Like it can happen quick, but 10 years for some people isn't quick. 5 years for some people isn't quick. Patience is the biggest foundation for anything financial. Patience.
Yeah.
Interest, compounding, patience.
Yeah. Listen to this one, not a humor.
Go ahead.
This one. He said, I'm normally not one to brag about my financial skills, but my credit card company keeps calling me almost every day to inform me my balance is outstanding. Did you get that one? You want me to repeat it?
Oh man, get that one. I've been there, man. I've been there.
Says I'm normally not one to brag.
It's urgent. We've been trying to reach you. Your balance is outstanding.
Outstanding, right? He said he's normally not, doesn't brag about his financial skills, but his credit card company keeps calling him every day to remind him that his balance is outstanding. Okay.
That's great. That's great. Right. Oh man. That's a
Okay.
dad joke. I'm gonna use over the weekend.
You would
Oh
use
man, I'm
that?
keeping that one. Oh yeah, that's a great one. I'm using that one for sure. I'm
So,
stealing that.
all right. Okay, so let everybody know how they could get in touch with you, as and also myself. It's 1-888-225-9593. It's 888-225-9593. You can get in touch with the Latin lender, Jose Velasquez, and Christine Gallimore Wright, your financial professional. Okay, Jose, anything else we want to touch on? We got a few minutes.
Um, yeah, I mean, like I said, this is one of those topics, man, like that I could talk about forever.
Forever, I know.
We did the credit. Income wise, I would there's a simple formula, you know.
Yeah.
Basically I'll make it super easy. If you make 100,000, it's 45% of your income. So if you make
Mhm.
$100,000 or
That's 45% of your income that's
right.
needed. You got to
So
show to pay your mortgage.
right.
Is it?
So
Okay,
that
great.
so we take $100,000, right?
Okay.
And out of that 100,000, what happens is we use 45% that's considered your front end, right? That
Okay.
is your maximum that your mortgage payment can be. So you take 45, you divide it by 12. That's your maximum. You take 55 or 50, because some places are super conservative and they'll do 50, max it out of 50, some are even 45 or 47. But use 50 because I like round numbers.
Yeah.
50% would be 50,000, and that is your total debt that you can have, period.
Oh,
So if your car payments, your credit card payments, student loans, everything is more than that 50%,
oh,
you're going to get denied for that
yeah.
particular house. And what people don't take into consideration is what I had said earlier, right? The first thing, which was depending on where you're buying, your taxes are going to be different, right? Depending on each state.
Right.
The same thing depending on in New York. So if you come and buy in New York, if you go to upstate New York, you might pay $5,000 in taxes, right? If
Yeah.
you go into Nassau County, you might pay 16,000, 20, 30, even 100,000, depending on what neighborhood you land, right?
Yes.
In taxes. And then if you're in Brooklyn and Queens, you could buy a $1.5 million home for $5,000 in taxes. So it's very, very weird in New York. So as
Mhm.
weird as in New York, it's kind of the same, a little less in other states as well. So when it comes to the payment, just remember to factor in the taxes. So if you're looking at a home that's 400,000 and another home that's 400,000, just look at the taxes, because even in the same town or the same neighborhood, that same $400,000 home might have different taxes.
Yeah.
One might have 3,000, the other one might have 3,100. And believe me, we count that 100. We divide that 100 by 12, and we go, okay, we're adding it into the payments. So even a small amount, guys, they'll take it into consideration. So just know that the math is the math. My job is to kind of just help guide you through the math, so that way you can put yourself in the best position possible. Maybe pay off some credit cards to be able to increase, let's say, the amount that you could borrow, things like that. Maybe just taking a look at your financials and going, hey, I'm spending, 50% of my income on all these things. Because when we start looking at it, I think that's where like it starts to come kind of real for people, right?
Yeah.
Like when we start looking at things and they look at it and they go, whoa, I have an $800 car payment when I could have a $400 car payment. You know what I mean? And
Yeah.
that $300 or that $400 cost them, let's say, 100,000 that they could have borrowed to buy a house, but they have it locked into a car. I think it helps shift people's minds, right? Like shifts
True.
people's ideas of spending, leveraging, right? Because we're always leveraging. People are afraid to borrow a lot, but meanwhile we're always leveraging. You're borrowing on your credit card constantly. You're borrowing to buy a car or to lease a car, right?
Yeah.
Constantly. And these are things that we're okay with, but we push our limits on that end, and then we kind of forget, hey, we should really be pushing the limits on the stuff that benefits us in the long run. So once we look at it on paper, and the clients come and you see 50% spending and you see where you are, that makes a difference,
Yeah.
and we try to keep everybody, as conservative as possible, and you stay within certain, periods. If
Yeah.
you follow the book, right? Because there's a book. If you follow the book and it tells you 5% should be allocated for this, 10% here, 50%, if you follow the book, it really works, right?
Yes. Let me
So I
ask.
think
Yes. Yeah. Let me ask the question, Jose. Uh, this tragedy, this is mainly for first time home buyers, or is it,
this
say
for
someone who want to purchase another
yeah.
home?
So the financial strategy is
Yeah.
it's for everybody and anybody. It's for
Okay.
everybody and anybody, right? Because we all need it.
Yeah.
We all need a financial strategy. A financial strategy. There's no financial strategy that is the one. That's
Right.
it. Like that's the truth. There's no financial strategy that is the one. What you need is a strategy, and then you go. And
Right.
then guess what? If that strategy you don't like, you change. Some of the most successful clients I have are people that we did one strategy and then we tried a different strategy and then we did a different one until they found the one. Because I'm different. The way I like to do things is different. But the way someone else likes to do something they might be more aggressive than I want to be. They might be more conservative. So my job is just to give them all the information possible and then just give them the loan and figure out how to get a loan for them. And then we move, you know what I mean? So that's kind of a big part of this is really tailoring and having that financial conversation with people. Have a strategy, stick to that, and put it through.
Mm-hmm.
Like I said, we already do it. We
Mm-hmm.
already have these agreements that we're going to make these car payments, that we're going to make these credit card payments,
Okay.
have Disney, Netflix, a cell phone, right? Like we already pay all that. We already do that. So
Yeah.
let's have that same wherewithal
Yeah.
in a financial conversation and put a strategy together and then just run with it. Every small
Okay.
amount of compound, the book.
Right. Okay. So yeah, we're getting ready to wrap up now. So we're just gonna summarize what we went over. I'm still stuck with the susu. I'm still stuck with the susu because
What do you mean?
I think I need a little more clarification. I think we spoke about this a few time ago. So I think
I'll
what
make
you
it super easy. I'll make it super easy. We need to be able to track everything.
right.
We need to be able to track everything.
Mm-hmm.
So if whoever's keeping the ledger of your susu, just make sure they keep the ledger really, really, really tight for the next 12 months to a year. You know
Okay.
what I'm saying?
Good.
The
Good. Yeah.
next year. Make
That's
sure they have that ledger tight for the next year.
yeah.
If you're already out of your susu, then make sure you put your money into your bank as soon as possible because we need to see it in the bank for 3 months.
Okay, good.
Right?
Yeah, that
So,
is what I wanted to clarify. They have to keep a record. The banker,
mhm.
have to keep a record at least for a year for the susu.
Yeah, so that's
Right.
exactly. So what I'm
Oh,
saying
okay, good.
is if you're in the process of trying to buy a home and you're in the middle of a susu, just be like, hey, by the way, I want to buy a house. We need to start keeping track of our records. Like, I don't know who's in charge of it, right? Like,
Yeah.
I don't know. I've never done a susu. All I've seen is the ledgers. And let me tell you, man, some people keep that very meticulous. Do
Right.
like it's very meticulous. So
Okay.
whoever's in charge of it, hopefully, is very
Right.
meticulous.
So all they have
Um,
to do is keep a
or
record.
keep a
Right.
record, keep
Good.
a
Good.
record, and or like I said, just deposit it into, once you have the money, put it into your bank account. Start looking for homes. It's probably going to take you more than 3 months anyway
Right.
to find a home. But once we have it in for 3 months, like when let's say you go into contract, you put the money in January and you went to contract in July, we're only going to go back 3 months. So at
Okay.
that point, it's kind of irrelevant anyway. But
Yeah.
nonetheless, like if you are in a rush and you really want to buy a home, like get all your ducks in line,
Yeah.
get
Okay.
your ducks
So
in line and
yeah.
take it from
Yeah.
there.
All
Yeah,
right. So thanks very much, Jose
no
Velasquez,
problem.
the
Oh,
Latin lover. I know your IG is the Latin. Did I say
the,
lover? Oh my God. Well,
I know you did, but that's okay.
that's okay. The
That's the
Latin
program.
lender. No, that was a humor. That's what a
The
part of my
Latino
humor.
lender. Yeah, yeah,
The
yeah, yeah.
Latin, the Latin lender. Okay. And I am
I
Christine
did that on purpose.
Gallimore, your insurance and financial professional. Again, you could reach us at 888 225 9593. And thank you very much for coming on. And we'll do this every week, every Friday from 6 p.m. to 6:50
Yeah.
p.m. on
And
Friday
listen,
evenings.
if anybody out there has a scenario, type it in, write it in, call it in, and I would do it on the air. You know, like if you have a
Yes.
particular scenario, I could always discuss that scenario, obviously with your permission.
Perfect.
And
Perfect.
you know, I'll talk about it and be like, hey, I had, you know, I spoke with so and so. You know, we use first names, John, just
Yeah.
John, and you know, and just kind
Yeah.
of go from there. But I would
Yeah.
love to do that as well. So anything.
Exactly. And they could go to my website. It's Living Benefits with the S, number 4, the letter U.com. That's Living Benefits with the S, number 4, letter U.com. And we have a form there, contact form, and you could put your information there and we get right back to you. You could set up a schedule to talk to us too. Our calendar is there. So once again, thanks, Jose, and wanna thanks Auntie Donna Moore Stewart from Positive Radio 106.9
Thanks,
FM.
guys.
Okay.
Thank you.